Good afternoon this Tuesday, July 23rd. Not much of a turnaround Tuesday given the gains we had seen on Monday. They continued today, Tuesday, as the index funds, who are record short, they're kind of working on trying to make some difference on the positions they have. And yesterday's open interest did not decline, it went up, which implies they didn't do much yesterday. So they are still likely holding a record short with possibly the threat of some dangerous weather coming for the month of August. So we're going to look at a few other charts, and we're going to talk about corn yields. Does it really matter once we get past pollination? And the answer is, when you see the studies from the University of Illinois, it does have enough significance that when you can trim yields of 10% or more off of 183, 185 bushel corn, well, that's 18 bushels. That would definitely mess up our corn market if, and I'm not saying we will, if we have this heat that's coming sticks around. So let's take a look at a few charts and some graphs. Okay, well, here is the heat developing now here today into tomorrow. It's more in the western plains area through Montana. Nobody's really scared of this. This is more of your spring wheat country and some row crops out here west. But as you watch, it starts to migrate into North Dakota, where we get into the corn and soybeans, and into South Dakota as well, right to the edges of a lot of that good corn and soybeans. Keep in mind, massive corn, soybean production in through here that gets affected, but it just stays west of it, that bad heat. As we look at the end of the month, that heat does push deeper in, and I'm talking this 100-degree temperature style, in here into actually Missouri and southern Iowa. It gets into this heat, and this is going to be coupled with, this drying effect here through August 1st. As you can see, the rains pretty much are drying up in here. A lot of moisture is becoming less in Illinois, and eastern Illinois and Indiana still stays in the rain. As we look out 10 days into August 4th, you can still some moisture in southern Minnesota and to eastern Iowa. So there is some yield protection in here with this moisture if it stays, and this dryness that we see all throughout here doesn't move too far east to really start affecting things. Now, this study I talked about, this is from Scott Irwin, University of Illinois. He really does some great work. I suggest following him on Twitter. He always puts out some neat information, and he talks about corn yield impact when we start moving to the various months. Obviously, July, precipitation and temperature, big deal here. You put these two together, that's 30%, okay? But late planting accounts for about 8%. But when you look at August temperature and precipitation, we're looking at almost, if the two are together, not enough precipitation with too much temperature, combined, you can be almost 10% effect. Now, if you take that off the national yield, because he's talking basically Illinois here, you could be dropping our yield potential by 18 bushels. But even if we just focused on the precipitation effect, 5%, well, 5% can literally, on our yield expectation right now, everybody's running with about 184 bushels to the acre. Well, gee whiz golly, that would put us below the 5-year record yields of 177 bushels and send us skyrocketing with how tight we play the balance sheets and how quickly we could be under 1.7 billion bushels. So anyway, it looks like, as we thought last week, wave 3 had ended at 403. Took a while to get it. We've been looking for an ABC rally, and by golly, we've got an A underway. And we had talked about how 416, 417 could be a problem, that if they went through that, the next stop would be 426. Well, we got up to 422 3/4, and that was our thought, somewhere up here for wave A in this low 420 range. Got the 22.5, 22 3/4 today, and then retreated into the close. Well, that's probably starting on our wave B. Could take us down to probably 411, maybe into tomorrow, midweek, because your friendly markets go up Monday, Tuesday, decline Wednesdays, bottom Thursday, then up into the end of the weekend and next Monday. And so maybe this could be the play here. A wave high today, a little B wave pull back to 411, 412. And then we push higher into next week if there is a scare for this. This is not to scale, by the way. These never are on the calendar to scale. And so maybe, which next week is typically a bearish week, we push into that as these shorts scramble into it and could give us a run. If this was 20 cents, pull back to 412, add 20 cents, well, that sends you up to 442. And this is our 438 to 440 prospects for a wave 4. Now, if it got extreme here, the 144-day moving average, which has always been a problem for December corn, would come in to check this thing pretty tough. And that would be a dream now if you could get it up to 460. But that could be the potential scenario if things got out of hand. I'm not saying they are. But La Nina is not coming, and so we could turn dry here in August and affect these corn yields. And maybe it's a bean lift that helps lift corn. Maybe it's the wheat lifting, because wheat's acting like a dog right now compared to French milling wheat. But wait for French milling wheat to start turning back higher again, and we could be dragging the U.S. domestic prices higher as well. Soybeans. Well, if you read yesterday's newsletter, we said the 1080 to 1085 range could be a top side here on this first push out of the low. Well, that occurred. And we could have a series of ABCs for this wave 4 lift. I'll show you in a second where this wave 4 comes from, and it could go all the way to $13. But just give me a moment here. We just had an A up. Maybe we get a B wave pullback, get another C lift. Then you get an ABC down, and then we get another ABC up. They're all series of ABCs, three ways, because it's a bear market rally, to a possible wave 4. And wave 4, Fibonacci-wise, could be to a 62 to a 78% retracement here, which could take us up into that 1150 possible range. Or if you look at the big charts, this was wave 1 down off the 2022 highs. Here's wave 2. We just completed wave 3. Wave 4, which could go to the bottom of wave 1, could take us back up to $13. Now that requires a freaky August, okay? That requires, oh my God, it's not 53.5 bushel like everybody was talking last week. It's barely 50. Okay, that could get us exploding. And keep in mind, the Brazilian FOB number pricing shows it's hard to get anything beyond September if you want to buy some beans. So we are going to corner the soybean market here coming into the fall, which we typically do September into January. But with Brazilian beans becoming in tighter supply, the Chinese, if they fear Trump, Kamala is not going to be a threat. They better get cracking and do some buying. The USDA has them down for 20 million metric tons, and as of currently, they only purchased about 620,000. So there's some big buying that could show up here, along with maybe some problem in August with beans. I'm just saying, you got to build the stories how they can develop, and a potential wave 4 in a big way could kick in here. September French milling wheat, we just talked about it briefly, bolted last week and held pretty good into today's close. They could have wrecked it here on Turnaround Tuesday, didn't. Even if we look at the continuation chart, touched moving average resistance on Monday, retreated today. If we can crowd through this, bigger things are going to happen, because our wheat might have scored a V bottom low, a one-day close below the March lows here, whereas French milling wheat got nowhere near its March lows, and today could be considered more like a two-day pullback before another buying session kicks in. Chicago wheat, inside day for right now. Maybe tonight it bumps this lows before finding buying interest, but again, V bottom here against the March lows. The French milling wheat did something like this and then has since turned up. Minneapolis wheat, yesterday's newsletter said look for trouble for Minneapolis at what would be today's highs near the 630 range. It retreated. We have the spring wheat crop tour going underway here, which is pretty much led by grain buyers, and they're always going to tweet out how great the crop looks. So usually it's be a rough week this week for wheat futures anyway with that tour going on. Crude oil. Another day down. Yesterday was our turn date. What these blue arrows are is whenever you have an expiring contract, that usually brings about a change in trend for a few days. If it dropped into it, it'll bounce for a few days. If you rally into it, it'll fall off for a few days. Same thing here, rally into it a day early, fall for a few days. Sometimes it scores the bottom or the high, but that hasn't been for a while. But for the moment, we fell into it, right into some major support here, which also is the 62% retracement that we closed back above today. So maybe we get a little bounce in here, back up to this purple line here area, where now we're at this 79.75. 80 is going to be resistance, bounce up into here, and then we break again, because we had a wave 2 high up in here. This could be a 1-2, a 1-2, and then we head down into a 3. The Chinese are not buying crude oil like everybody thought, and everybody is forecasting a slowdown in the economy later this year, where we're going to get interest rate cuts maybe in September and December. Cattle, let's take a look. Cattle crowded the trend line last week, and moving averages turned up yesterday, pathetic close, but today it bolted late in the session. Besides a few plants going dark, did move this market higher. Maybe now we're going to go from a $12 discount, might even go premium cash the way this thing acted today. And of course, that would essentially hurt the current hedges that we're hoping to capture a big basis and move their cattle. Feeder cattle still being the dog. Yes, it was up today. Even took out yesterday's low after yesterday's friendly performance early in the day on the cattle on feed report, and then fell away, closing 2 days below the trend line. Okay, so we lit up today. It's still a bearish chart until we can take out a previous high. Okay, and so the reality is, first stop, we got to take out the high made 2 weeks ago up in this 260 range. But more importantly, we got to punch through 263. That's the big dog. You go through that, then something's happening. But now corn is starting to light up. Will feeder cattle go with corn? Maybe they do. But the point is, feeder cattle have been a poor performer. Tomorrow is really going to be a sign, especially after today's outside day up. There's no follow through and a poor close again today. You can just see this thing is just slowly chipping through this support, and it's like it wants to give way. I don't have answers why. It just feels like it wants to. This is Eugene Grainer with Heartland Investor Capital Management. Hope you find this information useful.